The market isn't doing too much right now. The ES and NQ are both down a little bit, a few hundredths of a single percentage point. The YM is down about a third of a percent. I'm still relatively light, about 82% committed in my positions, still trying to play it safe, with the core positions being a diamond short DIA, a bond short TLT, and a kind of a smattering of other odds and ends. I've got the charts ready loaded, and so let's jump in and catch up, see what's going on out there, which, as I said, isn't a tremendous amount. It's odd because tariffs have come back with a semi-vengeance at least, and it's almost like the experience of April 2nd through 9th tempered the market into this kind of thing so that it kind of doesn't care anymore, because tariffs are getting introduced. There's a copper tariff of 50% introduced. All kinds of nasty stuff is going on. We're going to have to put him away. It isn't really killing the market too bad. So it's interesting to me because the market's way more than 1,000 points higher on the S&P than it was during the tumult of the tariffs. And now they're kind of coming back as if they were canceled, but nobody cares. The deadline, which was supposed to be tomorrow, of course, got pushed to August 1st. And Trump has said explicitly, this is it, no more delays. August 1st means August 1st. We'll see. If August 2nd comes around and they're actually intact, interesting, okay? But we'll see about that. We'll see if on July 29th they don't kick the can down the road again. TBD. But Spider is just hanging out near that midline, that dashed line there, which is the exact center of a long channel that's been going up for the everything bubble this entire time, ever since 2009, the everything bubble up, 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 up. And we are just at the trend line now. The diamonds, as I said, are down about a third of a percent. This is one of my kind of anchor positions right now. It's not some amazing pattern or anything. We had a failed bullish breakout here. So we're at a lifetime high on Thursday. And then we slipped hard yesterday, relatively speaking, and then slipped a little more today. So this was the lifetime high at the time. This was the little tiny bit higher lifetime high. It beat that old record, and then we beat that old record here, and now we're slipping again. So kind of a triple top in a way. Seems sort of unable to hold that level. The cubes are pretty much unchanged right now. And in this instance, we're above this damaged trend line, so which this trend line is here. It goes all the way back to this Halloween bottom in 2023. So we got this anchor point, failure here, resistance, 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 and it managed, because of this jump, to get just above that line right now. So we're hanging out just below lifetime highs and just a little above that damaged trend line. Some of the hotter stocks are definitely seeing some profit taking. AVA Technologies, AEVA, down a little more than 11% from its peak. Although one stock that clobbered yesterday steadied itself, perhaps because it was made clear by Elon that have not formed a political party. And we're just kind of glued to those Fibonacci's again. You can see what a powerful force those are. We felt very hard, and it's just sticking around that pair of Fibonacci's. So roundabout just under 300. Over in China, this is the Hang Seng Index futures going back for decades. And for a while, I was doing gangbusters. So we had, high after high after high. And of course, it couldn't be done at the time, but this was the peak. This was the lifetime high back in February of 2018. And since then, we've had a major lower high and then another lower high like so. So we're way below the highs from 7 years ago. For my own sake, yesterday or so, I shorted FXI. Not a huge position, but kind of a simple trade. Fingers crossed for China to slip. 37.30 is the stop loss on that one, like so. 37.30 on FXI. Closer to home again, semiconductors, another strong day. Big gains in the likes of AMD, on semiconductors, Microchip Technologies, NVIDIA, SMH, probably a lifetime high close. This show's recorded between 45 and 30 minutes before the close. So that's unknown, but it seems fairly likely that we'll get a lifetime high on this. That dashed blue line indicates the former lifetime high. And so we had the peak on Thursday, slipped some yesterday, and have pushed back to where we were on Thursday. So like I said, probably a lifetime high close on this. I do think that it's going to take some real power for some of the non-NVIDIA components to keep this thing cooking. AMD, for example, yes, it's up, but this gap is important on AMD. This one is at, what's that level right there? 141.01. And we've tried again and again and again and again and again to get past it. And it's just locked below in that little cellar down there. So that is an important level of resistance. And as far as on goes, it's right up against it. This is the topping pattern here. And we've got this price gap like so. That gap was defined way back between March 8th. Geez, Tim, get your eyeballs working. Okay. Yeah, there we go. January 8 and 10. And so we've got this gap here. It just about sealed it here. Fell hard, of course, during the tariff tumble, and then pushed, having a big update today, matching the kinds of levels we saw here, and on the upside here. So there's the line in the sand right there. So if this just zips right past tomorrow, then that lends credence to the SMH just churning right along higher. But it's kind of a test right now. Gold not having a splendid day. The front month in GC is down. Glancing over here, about $30, not quite 1%. It had a tremendous run here, but really ever since this peak back in April, over 2 months ago, it has been just treading water. And it hasn't really sold off, but it's definitely, at best, kind of consolidating those gains. And it could be just doing another one of these things here, where it just hangs out for 2 or 3 months before it lifts again. Did the same thing here. But the gold folks who are really getting accustomed to those fantastic gains probably getting a little frustrated right now. GLD itself down clean 1%. And it's got its own gap to contend with right there. 310.31 is the resistance level. Palladium is up, and we've talked about this a lot. Now, this is a very thin market, so this chart looks bizarre because there's all these like little individual dots. Very, very not a heck of a lot of data to go on here. But over the long term, we've got 1, 2, 3 major bases. There could be plenty of backing and filling on this. It could be months before this truly breaks out above that green level, because in the past it's done that. It's really hammer out firm bases before launching. But PALL itself, the ETF for Palladium, which is also quite thinly traded, has had a series of gaps, and right now it's kind of landlocked here a bit. Resistance, this red line up here, 102.92, and down here support, this gap down here. So stalled out in this zone. Long term, I still think it's going to have do very well. But you've seen before, you get these big launches, and it can take months to digest that before launching again. Added to which, platinum is pretty lofty right now, and it wouldn't be surprising to see this maybe even take a hard hit. And if it did, that would most certainly bleed over to the world of palladium. But miners are quite weak today with all this going on. GDX is down 4.3%. We've been banging around for weeks in this range. We're in the lower portion of that range right now. The junior miners also down, not quite so much, but support on this one short term is at 4.92. I would also mention XME, the metals and mining ETF, which is more broad than GDX, is down, but not by much. And that's probably because the copper got the 50% tariff, which was of aid to American copper companies. So here we see HG, the copper futures, up very strong. Even if it's backed off those lifetime highs, it's still up about 10%. And FCX, Freeport McMoran, up over 3%. So definitely enjoying the the 50% tariff slapped on overseas copper. What else is cooking? Well, wanted to mention a couple of existing short positions and just talk about them in a little more detail than I usually have time for. This one, FLR, Fluor Corporation, is interesting because it goes back many decades, but long term, it's been in this kind of slow grinding bear market. The lifetime high was way back here in the summer of 2008, and it peaked around 80, and it's around 50 now. And it had this tremendous plunge. It bottomed out during the COVID crash at $2.85. So, it's up about 20-fold since then. But what we've got going on here is we've had this incredible climb higher, just a steady series of higher highs, higher lows. And this peaked in its own way right here, back in November 2024. What I've been watching, though, is this gap, this price gap at 54.2. And so I'm short this position, and that gap is the basis for stop loss. So provided it does not cross above that gap, I'll be sticking with that short. And you can see from this distance how it definitely, to my eyes, has the opportunity for some downside there. Another one I mentioned specifically yesterday is Nike, NKE, down 3.5% approximately. And this one, it broke its lifetime trend line a long time ago, but my focus in this instance is this right triangle top right here. So being defined as this descending trend line and this base, like so. And that base is also my stop loss on this. So NKE short, with the stop being any crossing above 77.5. In the 70 seconds we've got left, let's just talk interest rates real briefly. As I mentioned, also the other kind of core position for me is TLT. I talk about this a lot. This is down about 30%, slowly hammering out this hoped for top over the course of the past year and a half or so. And the base on this one is down at 82.68, which isn't too far away. That's about $3 from here. So about a 4% drop from these levels would complete this pattern, which I think would be pretty nasty for TLT. The different angle on that is ZB, like so, and you can see the same pattern hammering out there. The real question, though, of course, broadly speaking, is, this. Even today, Trump was talking about Powell should resign, and even if that were to happen, and even if Trump installed the most sycophantic, compliant governor for the Federal Reserve, I don't know if that would truly bend time and space to his will as far as interest rates go, because the interest rate market is pretty big and pretty powerful and very global. The real question is, will this kind of chart, and this is the market yield on U.S. Treasury securities, is this indicating to us that much lower rates are ahead? It could. We've seen tops again and again and again, and what we're seeing here resembles a top. But if you look through a lot of interest rate charts, some look like this, and some look like they're kind of sneaking up to the upside and breaking out. So it's very murky right now. But I'm definitely keeping an eye on LT, not only because it's a position, because I think they'll be very indicative of this big question, whether the demand for bonds ruins the notion of those lower rates.
If you're not subscribed, subscribe right here. And if you want to meet me and the team in person at our next live event, hit the link at the top of the description.